Hey everyone, thanks so much for joining. My name's Denise Loria. I'm the Special Projects and Operations Manager at AFC. We're thrilled to have you join us today where we're going to be talking about tech infrastructure. We have a great panel and I'm sure you're going to enjoy the dialogue. This webinar is in collaboration with our new Policy Summit series, Webinar Wednesday. Our Policy Summit is taking place November 18th at the Westin DC City Center in Washington, DC. We actually just sold out this week, but the reason why we kicked off this series is we wanted to build the momentum, get the conversation started. So we had two webinars take already place, and this is our third of the series, and we have one taking place next week. So what I'm going to do is I'm going to pass it over to Leah, who will be our moderator today. She's going to kick off the dialogue, and I hope you guys enjoy.
Good afternoon, everybody. Thank you so much for joining. My name is Leah Campbell. I'm a partner at the law firm Bradley Arent Bolt Cummings. I am a bank lawyer, and immediately before joining Bradley, I was in-house in New York City at Deutsche Bank, where I handled technology contracts. And so have been working in this space for quite some time. I'm really looking forward to sort of talking about these technology contracts and what it sort of means for banks as they move forward. And explore new opportunities. I'll hand it over to Amanda for you to introduce yourself.
Thank you, Leah, and thanks to AFC for having us today. We're all excited for the Policy Summit. So Amanda Swoverland, I'm the Chief Compliance Officer at Unit. I've been with the company since the very beginning. I believe it was employee number 4. So it's been an exciting ride as we've built the company out, and we're an infrastructure company for the embedded finance space.
Do you want me to go next?
Yeah.
Okay. I'm Sheetal Parikh. Great to be here. I'm the General Counsel and Chief Compliance Officer at Treasury Prime. And I will pass it to Sam.
My name is Sam Martindale. I'm the Chief Technology Officer at Afterman Software. We are a boutique firm that specializes in building out embedded finance and a lot of the technology for sponsor banks and for fintechs. So.
Hey, I'm Aly Kassam. I'm head of product here at Infinant, and we manage solutions for banks to be able to go to market as with an API platform that allows them to do everything from virtualizing accounts, payments, as well as card processing.
Very good. So what we're going to talk about today is how banks and fintechs can connect, and the importance of sort of with each other in order to sort of expand banking business, and the importance of the sort of underlying infrastructure and the relevance of that as you sort of step forward into new strategies. The starting point, because I do come at it from a bank perspective, the starting point for banks in this space is always the 2023 FFIEC guideline, the guidance that came out in June of that year, basically advising banks that you want to treat these relationships similar to how you would treat your FIS platform or your Jack Henry platform and that sort of thing, sort of have that kind of third-party risk-based oversight, but sort of, pushing forward and giving and opening up the doors to this, to us working together with our fintech partners. We came up with a series of questions, and we also fielded some questions as you in the audience, as you signed up, you also sent some questions. So you may see something or hear something that you've asked in the past. The first one is, how can banks balance the opportunity to generate new revenue streams with the need to manage regulatory risk? And that really, to me, is answered by that June 2023 guidance. But I was wondering, Sheetal, can I ask you to sort of give some of your perspective on it as General Counsel and Chief Compliance Officer?
Yeah, absolutely. And, I think I would start by saying the fact that all of us are here and our organizations and companies exist, I think that is really a testament to there is definitely a need and there is synergy with what we're seeing with community regional banks specifically and tech companies partnering. So I think there is a lot of need for, particularly on the banking side, to stay relevant as banks are looking to innovate, get a broader reach of consumers. And so I think that the partnership is very vital, and that's what we've seen. I think how you balance that is Obviously, there's no magic formula, but I think what we're seeing with a lot of the regulatory guidance that's come out, the FFIEC, as well as all the OCC, the joint guidance, that it's really been all of like I think a collaborative effort to figure out how do we solve for this. I think it's engagement. I think banks really, and I think that's what the 2023 guidance says is the reason banks should be looking at tech companies as their third-party service providers is because banks need to understand, who these organizations are, how they're funded, who their end customers are, what their use case is. So really like that level of diligence, as well as how is the data flowing, and being very engaged at every step of it. I think that's what we see is that a lot of times where banks want to get into this but aren't fully invested. I think that's where it becomes tricky. And the investment is not just a capital investment, but a human capital investment, and making sure you have the staff to be able to oversee it. So I think it's balancing the investment of like knowing who your tech partner is, and then also being committed to this as a line of business.
All right. Aly, I wonder if you can talk about the sort of technical piece to it, having to do with sort of how is the tech ready for the scale that we're talking about, not just ready to execute, but also ready to execute in a safe and sound way?
Yeah, I think a lot of, and this will probably be echoed across Unit Treasury Prime as well. A lot of the tech is built on cloud platforms, right? The ability to scale horizontally, which is really being able to replicate servers, is all embedded into the ecosystem. So as you start thinking about, I want to be able to scale the number of customers, I'm moving away from this historical idea of on-prem solutions or private data centers where I need to buy more servers. Now I can scale virtualized servers in this environment without having a problem. So if I have a peak spike of transactional activity, my infrastructure is already scaling automatically, and then it decreases in size. So what it does is it allows more efficiencies from a cost perspective to the banks, because now they're not actually having to scale them manually and buy the servers. They're really using the cloud environment. And so it really leads you into thinking about how to use cloud in these environments efficiently, given AWS, Azure, and Google Cloud Platform and their capabilities.
Yeah. Amanda, how would you say that the people keep up with the technology? How do you sort of think about that? The technology can run a whole bunch of transactions, but do the traps need to be run?
Yeah, it's exactly right. When I think about a bank that's going to get into this space, and actually this could go for any tech company as well, is you really have to start with the strategy, and a lot of the things that Sheetal and Aly talked about in terms of scale and asking the questions and who do you want to serve, what is your risk appetite, where do you want to focus? Do you want consumers? Do you want businesses? Do you want domestic? Do you want international? Right? There's so many questions that you have to ask when you're going in to make this investment. But preparing for scale is one of the biggest things. Once you answer all of those preliminary questions about your risk appetite and your strategy, is how are we going to do this in a way that, we all know that programs can start slow, but all of a sudden one of them pops, right? And they're growing fast and they're onboarding thousands of customers every day. And so you really have to think about building for that moment, right? Just because you can do something manually right away doesn't mean that next week you're not all of a sudden going to be in like, an expedited fashion of doing something. And so really thinking about repeatable processes. Where can we insert technology to help us with some of these things, and thinking about those things up front and not waiting too long to scale. And I know that's an investment that you have to make up front, but where are you going to get your staff augmentation from? If all of a sudden a program blows up and you need to start looking at BSA AML monitoring alerts, do you know who you're going to call? And do you have a contract in place to be able to do that when that pops? So you really have to think about it, people, process, and technology when you think about the scale that can come with this business, and be ready to invest in it early before it even pops, because when it does, it happens fast.
Right. And Sam, in your experience, have you seen that sort of that the fintechs and the banks are in lockstep, or are they sort of bringing each other along as they go through these transitions that you talked about?
That's a great question. I think in many cases they're kind of dragging each other along. Maybe dragging is a strong word. Pulling each other along. We'll
Sure.
put it a little bit more gently, right? Because I think in the experiences that I've seen, a lot of times the fintechs will have a great idea that they'll bring to the banks to implement. And maybe the bank ponders, do we want to accept this risk? There's regulatory risk. There's tech things that we can't figure out, right? Like, how are we going to get going on this? And I think, I think they tend to make each other better, if that makes sense. Although I've seen a lot of partnerships where maybe that isn't happening. And those are maybe what I would label as like the not as great ones, right? Where maybe the fintech is just willing to accept whatever the bank is giving to them and maybe not coming back with enough feedback on how they could make it better, how they could improve, or maybe not involving them in the full story of what it is that they're trying to build. So I think continuing to build those relationships and those dialogues is really important in making sure that this ecosystem continues to evolve in the correct ways, right?
And
You
I
know,
think that's a really important point. Sorry, I just want to, one more thing that I want to highlight. I think the word relationship is so critical in this
Yeah.
ecosystem because I do think the banks that we see, the bank fintech partnerships that work well, they're feeling each other out. They're getting to,
Yeah.
they're calibrating risk. And so maybe the bank will say, okay, we're gonna start you off, but maybe not a card program right away. We're gonna see how this works, and then maybe we'll build to that. And I think that the relationships that grow organically and naturally tend to be healthier. And then also from a
Yeah.
risk perspective, so I think that word relationship is very critical when you kind of calibrate what success looks like.
I agree. And traditionally in my technology contracts, I've tried to include, when I'm on the buy side, I've tried to include language that says something along the lines of we'll meet quarterly or something like that, so that you have regular touch bases. It's just always scheduled there, and to have that kind of touch point, and build that relationship so that it becomes a normal part of your operations. So that's sort of a tip to some of your program management agreements, thinking about building in these regular touch points. And in addition to everything else that you want to build into it, but to have that kind of concept. There was a question that we talked about a little bit earlier when we were organizing for this, but one of the things that I think touched off a lot of thoughts was for the banks out there. What do fintechs wish that the banks knew about this? And banks who are coming from sort of a real brick and mortar community banking perspective, a lending book, a pretty conventional book. What do you wish they would know about sort of partnering here, in addition to the fact that it's a powerful engine of growth? Let's stipulate to that. It is a very powerful engine of growth. But what do you think you'd like them to know about that? Uh, Amanda, just
Yeah,
keep
I
going.
can
It seems
I
like,
can jump in. I think that, for if you're a tech company, what you want the bank to know is, I think that there's often the saying of move fast, break things, that tech companies get put into this, careless nature of just going and doing whatever. And I think that that's actually not the case at all. I work at a tech company. We absolutely do not do that. And I think that there's many that we all work with and clients that we all work with. I think my peers on this call would all say the same thing, that I'm sure there's those that wish we would move faster, but we don't.
Mhm.
And I think that the tech companies feel the same. I really boil it down to when I see successful relationships, and you're going to hear that word so much today, I think, because this is relationship banking. It just looks a little bit different. Is predictability. I think tech companies want predictability. They want to understand what they can expect from their banks, and they want good communication. I love that idea of the quarterly meetings. If you're a bank that want to enter into this space, you need like a customer success manager to talk to your fintechs and talk to them. They want the communication. They want you to answer the emails. They want to know what the rules they need to play by are. They want to make you happy. They might push back on something because they know the end user experience is going to be poor if you do this way. But don't stop the conversation at no. Stop it at, well, what else could we do? What are the other possibilities in this scenario? And they really want to work with you to be able to do that. And so if you're willing to open that dialogue with them, I think really, really amazing things happen. So my two are predictability and good communication.
think it's
Sam?
like a vibe
Sorry, go ahead.
factor too. And I think like to the point of fintechs wanting to move quickly, I think oftentimes when they want to get to market, they're just looking for the bank partner that's either going to give them kind of the most optimize their relationship and things move quickly. But I think that there is kind of like a vibe factor of like, do you vibe with this bank? You know, are you paying attention to how long they're taking and responding to emails, for example? Do you have a dedicated person? I think those things are like very early indicators of how the relationship is going to go. And I think what we see is when you vibe and there's that cultural fit between the fintech and the bank, the relationship just kind of grows in a better way and in a more organic way. So I think, and that goes for both the bank and the fintech, but I often find that not ignoring like those vibes are important.
I
Yeah.
think that from a project management perspective, right? When an implementation needs to happen with a fintech and a bank, all the kind of deliverables upfront need to be outlined. And I think that what ends up happening is when those are not clear, when the possibility of the product set is not clear, not well defined, what ends up happening is you have friction between the fintech, the bank, and one of like the technology providers, right? And so when you can have a clear, defined implementation plan as a fintech is coming on board, being able to highlight here are your possibilities, here's your relevant possibilities, these are the vendors you can work with. When a bank is well defined in those areas, it helps the fintech and guide them down the right pipeline. Too often we see too many ad hoc requests around implementing new vendors and things like that, where the bank is not completely secure on which vendor they want to go with, and ends up creating more confusion, more timeline delays, because now we need to go and investigate this new vendor, whether that's KYC, KYB, it's AML, and so on. Helping define that set as a bank will really bring your fintechs into the right. Will help the fintechs kind of define what they want to build. That being said, we get a lot of fintechs that also want to be able to bring their own vendor, right? So we understand that, but from a bank perspective, it really helps them with the rinse and repeat kind of capability with the fintechs.
Right. And for good bank compliance, what you want is rinse and repeat. You want that sort of workbench predictability there. Sam, from your perspective, and this is kind of just picking up on something Amanda mentioned, the customer success manager. Is the customer the fintech, or is the customer the end user? Like sort of, or are we all customers to each other, so to
I
speak?
think we're all customers to each other, but
right, because we all need each
typically-
other in the ecosystem.
Yeah,
Right?
it just depends on the context, right?
Yeah.
So, but typically the way that I engage, or that my company engages, is almost always with the bank that's trying to serve the fintech as their customer, and then maybe there's customers on the other side of that fintech that we're serving by extension, I suppose. Although we've certainly done a lot of work where we're working directly with direct bank customers as well, and sometimes like that middle ground, right, where we've got customers that are customers of the bank and customers of the fintech that are being served through the bank's APIs and services. So it, kind of a mix, right? But ultimately we're servicing all of these people, whether it's through a fintech or directly. The way I look at it is you're servicing a person at the end. You're servicing a person or a company. There's an entity that values the service that you're providing, whether they're getting it directly from the bank or getting it through some fintech that's connected to the bank. You're worried about their experience is what you're really worried about. How great can we make our APIs? How great can we make our services to service them? Because if they're not coming back to the fintech doesn't need the bank, right?
I think that's right, although the fintech doesn't have to set reserves or conduct examinations or things like that, right? So
Sure.
to a certain extent, they do need, so from my perspective, sort of going back to it from a bank perspective, and this is just living with, examiners on site and things like that. So it's sort of hard won perspective. But the customer is the person who's deposited money at the bank. You know what I mean? And the person who's taken out the point of sale loan, that sort of thing. That's the customer for all of us. And the success, the really secret sauce in my mind to the success is the bank's ability to push out what it does using the fintech, right? To the broadest area possible. The reach is just extraordinary. If you want to focus on recent college graduates, or if you want to do something like that, the data is right there ready for you to sort of, go into market with bank product. And that's where communication and relationships is just so key, is having the ability to really sort of be able to have it feel like technology, but also be as safe and sound as the bank would be on day one, before technology even came along.
I think that's right. I think it's the bank's job, and those of us that are building within the banks, to preserve the safe and sound, abide by the regulations, put in the tech to make sure that we're following rules and regs. I think it's the fintech's job to then maybe use those building blocks to innovate with ideas that the bank was previously unable to, or they just have different ideas that they can build faster on top of. Great. That's what we're building the ecosystem for.
And that they're seeing out in the marketplace. Yeah.
Right.
Leah, I think that one of the points that you make is so important. Our North Star should always be the end user, that person that's actually using that
Great.
that application, right? Whenever there's a tough decision that needs to be made, or there's something that's happening, like, you can cut out a lot of noise, and the decision always becomes a lot easier when you think, what is best for that consumer or that small business or that end user? What is the right thing to do in this situation? There can be a lot of noise and a lot of things that are happening, but when you make it about that North Star and, like, where is that person's money? Do you know where it is? Is it reconciled at the end of the day? Who are they going to call? Is somebody going to answer the phone? You go back to that third-party risk management guidance and you take the end user as your North Star. Like, that is banking 101. And I think when everybody can kind of come back to that principle of looking at that as the end result that we need to have as a better product or service for them, it makes so much of this easier. And when we don't get lost in the noise.
Right.
I like the fact that everyone keeps using the word end user. And from a banking perspective, the end user is always the consumer or the business that's actually using the financial products. When building products, and I think Sam was alluding to this earlier, when building products, your end user could be different. So your user persona for the console that we have would be banking or the program manager, right? The user persona for your API portal would be the developer on the fintech side. And so we learned this pretty early on, and from feedback from our customers saying, hey, we want a really great experience on the developer portal side. How could you refine it? How can you make it better? And we went through iterations of actually doing that, because that particular product set, being a software product in this case, is being used by developers. How do you make the API portal so well that the developers can go and actually do their job on their own? I think that lots of times when banks are talking about the end users, they're really reflecting on the financial product and where it's going for the consumer and the business. But when we're thinking about it from a technology perspective, we're always thinking about, hey, we have multiple personas to facilitate needs for. It's not only the end user. Yes, we need to do things like cardholder agreements or account holder agreements, and we need to make sure that the fees are correct and they're properly defined, and all of those good things that the banks are doing today within their customer set. But we also need to be able to do all the good things that the fintech needs from a developer perspective, from a revenue recognition perspective, being able to define better processes and automated processes. The fintech doesn't have to build more, whether that's for no code, low code solutions. So I think it really defines on the type of product. And sometimes when banks are thinking about this, and I've had the opportunity to work with them lots of times, and a lot of compliance folks, is thinking about the end consumer. We really need to also focus as a technology provider on all the different personas that we're kind of facilitating need for.
Good point.
Right. Sheetal, from your perspective, one of the things that I've seen that kind of is key to successfully starting is where I see some sort of falling down is when the fintech comes through the wrong door at the bank, meaning goes through a deposits guy, right? Or card guy, right? But card guy probably doesn't know that what he really needs to do is actually kind of go back and talk to third-party risk, that sort of thing. And that in my mind is one of the it's just one of those things in financial services. What is this animal? Let's figure out what this animal is and where it belongs.
Yeah.
So have you seen something similar where it's like making sure you're getting to the right people?
Yeah, I mean, I would almost frame it slightly different, like just making sure there's buy-in at the highest
Mhm.
levels of the bank, from the board to the innovation team. That's probably the folks that are sales folks that are bringing in or, vetting the fintechs, to the regulatory compliance and the attorneys that are actually doing the due diligence. So I think and I think like this spills into the prior question about, who's the customer. I think this is what makes this space so complex, is I actually think there's kind of two different kinds of products. There's the technology that
Mhm.
the tech companies like the Units and the Infinits and the Treasury Primes are selling to the banks, that we're selling our tech, but the tech is essentially facilitating offering of financial products and services, which is what the end consumer is actually consuming. So I think that what makes this so complex is there's actually two, it's kind of bifurcated. There's the tech product that's being consumed by the bank and the developers of the fintechs. And then there's like the financial products and services that are being consumed and leveraged by the end customers. And so I think that's what makes it so complex. But I think that a way to navigate it, and we see a lot of our banks do it very well, and we've seen banks that haven't done it well, but the banks that do it well, and I think Amanda alluded to this earlier, they've put a lot of thought. They're very deliberate about it. It's not just thinking about this as an additional product offering or an additional revenue stream. It's committing to this as a line of business. And so once you commit to it as a line of business, you're investing to, how do you want to dimension this? Like what is like kind of what would be a deposit volume you'd be comfortable with without
Right.
regulators getting, too worried. And that's where I think the getting buy-in and making sure all levels of the bank are very much plugged in to kind of the ideal customer, the volumes, the transaction limits, getting very aligned. And I think when banks are aligned at that level, it's much easier to even know if a fintech would be a good fit or not, because you have a very clear idea of who you want to work with.
Yeah. I'm going to pivot over to another area that we kind of talked about before, and this is an area that's going to become even more full of friction because of the bank portability rule that's going around, bank information portability, who pays for it, who doesn't pay for it, that sort of thing. So, but that brings up a topic that I think is often a point of negotiation and education at banks and at the fintechs. How do you guys manage data sharing? Who owns the data? That, what can you do with the data? What do you wish you could do with the data, but you probably can't do with the data? Because after all, if you have somebody, like, say it's just a straight digital wallet, there's a lot of information in there. That is it, when done at scale, is very valuable. So I throw it out to the floor if there's anyone who has a strong opinion on that, kind of what to do.
I think that so the way we've thought about this, and I just got this question because I walked out of a fintech call right before this, was can you share data across multi-tenants? For instance, I have multiple fintechs at the bank. Can I share the customer data across? Can you do it across then banks, right? Because now you have efficiencies to be able to move money between banks without, because you're installed is at multiple banks. Can you move money across multiple banks? And I think the industry may not be there just yet. Now, we can provide data to Snowflake and things like that, where you can have reporting databases at a centralized location for a bank, so the bank can actually amalgamate the data and make sure that they can see every single aspect of the customer. But when it comes to things like money movement and going around the Fed, which I'm sure you have a topic around stablecoin that's probably coming up in a second, but without alluding to that too much, but essentially the industry is moving in that direction. I don't know if we're there yet today. With regards to banks being able to segment their information, it's very much the case today that in production environments they don't want to share data, right? And so I think there's some data privacy issues obviously associated with that, and disclosures
Exactly.
that need to happen to do that. But at the same time, I think it's an industry today that's super highly regulated, and banks wouldn't want so much data sharing because there's a lot of things as a technology provider you'd love to gain from that. And I have not only the fintech background, but I started in MarTech and data sharing. I mean, that's gold, right? Like being able to take advertising information and share it across, it's amazing, but it infringes on a lot of privacy issues when you start coming into banking and Bank Secrecy Act and so on.
Sure does. And it's hard to put that, once it's out there, it's very challenging. You can't unwind it. You
Yeah.
can't unwind
And
that
I
bell.
think with respect to deposit products, I think a lot of us are in kind of on the deposit side with we're dealing with these are bank accounts. So I think unequivocally these are bank accounts. It's the bank's data, full stop. I think we use contracts and commercial terms to figure out licensing and who has a license to use the data. And then there's obviously what Ali mentioned as far as like what are the provisions and the guardrails to actually share data that, you know, is being licensed. I think it is really complex. Obviously, 1033 is very much in flux, but I do think that like there is a standardization that behooves the entire industry. And I do think that what the whole idea of whether banks should be charging, I mean, that's probably a whole separate topic, but having at least the data in a standardized format is, I think, something that is going to be prudent for all players in the ecosystem. And the ease of the portability is going to be I think critical to how the space does.
I agree with that. I think there's a further challenge that maybe needs to continue to be worked out. We're making a lot of good progress, but I know in like the early days of a lot of these integrations and partnerships, sometimes the fintechs didn't always send all of the end consumer data to the sponsor bank. It was just an FBO account, right, at the sponsor bank, and the bank didn't really know, you know, as we saw from some events in the last couple of years, right? I think we're getting away from that, right? But I don't think that every sponsor bank in the country has fixed that completely yet, right? And so I think the first thing we probably need to do is really push for proper subledgering and you know, those types of solutions like Infinant brings, and you know, so that we can start to get more detail in the data on these large FBO accounts a lot of fintechs bring, so that then we can get to the point that you're talking about. But I absolutely agree with all the rest of what you're saying.
I think all three of us cringed when you said that, because I think if you look at all three of our platforms, we do all of that.
Yeah.
I think we're still seeing a lot of from the payment processing side where the data is sitting outside and moving to the FBO. So that industry around payments is massive, whether you're a payment hub or you are a card processor. Banks don't necessarily have the data today, and lots of banks that we talk to, they don't have the information, the granular data that's enough. And I agree with Amanda. All, you know, three of the platforms that are here today have the ability, right? They have the ability to store the information. They have the ability to make it available, right?
Agreed. And I didn't mean to imply that it didn't. I think what I'm saying is I don't know that all the fintechs are being forced by the sponsor banks to leverage that functionality yet,
I
right?
want
So
to yes, and I don't mean to step on you, because really I wanted to underline what you're saying, Sam.
Yeah.
Is that and this is for the banks to really understand that they can't, there is no set it and forget it. And the FDIC rule that came out last year in response is just as clear as it can be. And it was always the case, but they just reiterated it, that you're required to know at the end of every day, down to the penny, whose money is in those FBO accounts. Whether or not that's true, you know, that's what audit rights are for.
Right.
I think that's such an interesting point, Leah, because the FDIC guidance that came out really wasn't a new rule. It
was not.
It really reinforced the rule that already existed with respect to fiduciary accounts and things like that. So I think that's true. And to Sam's point, what we've heard, at least from our banks that are being examined, whether it's FDIC or OCC, Fed, I think regulators are starting to look at this. And so I think regulators are starting to ask the bank questions about, show us how this is reconciled, walk us through, you know, we're going to pick a couple of fintechs and walk us through operationally what your reconciliation processes are. So I agree with you. I think it probably needs to there's probably a lot of room for improvement, but I do think regulators are at least.
I agree. I think we're all pushing in the same direction. I'm just not. I know every bank that we're working with is there, but I don't know that every bank in the country is there. So that's my fear, right?
Yeah, and I think there is a gap in the compliance. Some community banks that are that are not examined necessarily by OCC, but are state chartered. I've definitely spoken with some state bank regulatory authorities that are sort of, see a bank, go into a bank every 3 years and are kind of baffled by what some of this stuff is. And of course they're getting educated and they know what it is now, but yeah, it is a thing. And I think it's going to be a challenge. And the thing is, it's a challenge that technology can solve, right? That's why we like technology. If you think about, so one of the issues that I think came up or was demonstrated by events of the past few years, is the volume increase that happened where you had the coincidence of same day ACH push and pull and APIs. It was just an explosion of sort of volume out there. And I think that there is a catching up that's happening where people are realizing that this ability to sort of push and pull from, it is something that technology can solve, but it does need to be solved, because by the time we figure out something that's gone wrong, I don't mean to be, hyperbolic, but $1 billion could have been moved, through a bunch of transactions, Anyway, so in terms of the response from the examiners, what I've been hearing from my clients, my bank clients, not to share anything specific, is the expectation is on the bank to know what's happening inside of its four walls. That I'm using an old IBM phrase. I don't know if any of you are old enough to remember IBM days when they were the big powerhouse in technology, but IBM famously wanted one throat to choke. They didn't want to have to go around their direct contractor to their subcontractor. I'm not saying the examiners are like that with banks, but it's the same concept. They're not going to go behind the bank to you all, except to possibly do an audit or something like that. And certainly not, they're not gonna chase down a small fintech that has a new idea for for a branded card with Pokemon Go or whatever it is. But you see what I'm saying? Their concern is with, and they've been explicit about that's their expectation, is that we have control over you. We, as the examiners, have control over the banks, or supervision over the banks. You're the ones we're gonna go to. So have you all, if you could share any sort of experience with respect to the sort of standing up a program. I mean, like starting a program from scratch, and specifically around deposits. I think that there's been a lot of sort of lending type of arrangements that are go back probably 10 years, things like that. But I wonder if you could sort of, if anyone wants to share sort of an experience of standing up a program, and lessons learned from that experience.
Like standing up from the bank's perspective or the fintech's perspective?
Well, I suppose let's ask you that. Do you find yourself, or does Unit find itself where it is connecting the fintech to the bank, to its bank partner, and doing that introductory role? How does that work?
So we actually serve we serve both sides of the marketplace. So we work with tech companies and we work with banks. But we really are just the tech provider. So as we meet somebody that's, hey, we'd like to work with your APIs, can you introduce us to some of your banks? It's open, right? They'll meet all of our banks that are in our now if we know somebody doesn't want to do consumer and it's a consumer program, they probably won't want to make that introduction because that would be a waste of time. But we let them meet, like all of the banks have an opportunity to take a look at it, and then they take the conversation from there. So we don't really play any role other than, hey, if somebody wants to use our tech, would you like to meet? In some cases, the banks have their own market or their own like sales force, and they can just go out and find their own clients and bring that into the tech. It doesn't really matter where the tech comes from for that case. When I started at the bank, when I was at my former employer, we did stand this up from scratch. It was prepaid back in 2011, 2012, and then it morphed into DDAs and into the lending products and everything that we have today. But honestly, like one of the biggest things like that you got to focus on when you stand it up from scratch is BSA AML. Like if you go and you look at all of the consent orders, make sure that you have your BSA AML infrastructure in place, know who your provider is going to be, know how you're going to get that data, be very descriptive about what you want to collect up front on your CDD, EDD, and collect that, come up with your risk rating methodology. How are you going to compare that to the bank, your traditional side of the bank? How is that all going to coalesce? Is all the data going to go into the same system? BSA starts the foundation, and it is the quickest and fastest place for things to spin out of control when you don't have that on the deposit side. And then reconciliation. I mean, I could go one or the other, first or second place on those two. Is that as you're standing up the program, and it all comes back to data, right? Making sure that the bank has the right data to do the reconciliation and then feed it into its BSA AML program. I mean, this comes after the strategy risk, but you've made your decision, you're going to invest, and now you have to actually start doing physical work. I think that those are the two key parts, and then building out what your TPRM program is going to look like. What documents are you going to require at due diligence? I mean, the playbook's there. Exactly what the regulators are going to ask for. And then once you're up and running, making sure that your senior management and your board is getting regular reporting on how things are going. And the last thing I'll say on this is have a plan for when it goes wrong. Sometimes these things don't always work out. And so you got to make sure you know what you're going to do to unwind a program and wind it down when it doesn't work out.
And that's true for all of banks' technology providers. It's very challenging for a bank to pivot off of a technology provider. So banks should always be thinking about a transition management, bake it into your agreements, make sure that they're going to be well incented to remain. I've seen that on checklists for, examination for audit, do you have a plan to get off this? Because it's like flying a plane, you can't stop. You need to be able to land and deplane the passengers. Aly, you touched earlier on some of the potentially new products at the risk of infringing on sort of a next week's or the next webinar that's coming up about digital assets. But somebody did ask before when they signed up for this about sort of blockchain technology and assets that relate to that. So is that in your planning? Is that in your path?
So yeah, we've been looking at this and this is public knowledge at this point, with Vantage Bank and Custodia. We did a webinar a couple of weeks ago as well about it. And essentially, the process is really thinking about tokenized deposits and stablecoin, right? So you're doing cross-border transactions over stablecoin, but in network in the country, you're doing tokenized deposits and being able to pass those around. Genius Act really covers that stablecoin ideology around being able to regulate stablecoin and how that be regulated. However, on the tokenized deposit side, they're still treated FDIC insured accounts. They are treated, they're not as regulated by the Genius Act. And really just tokenizing the US dollar. And so what we're doing in that front is we're working with a consortium of banks to be able to create a tokenized deposit network, being able to move funds between different banks by ledgering the funds across those banks. And so when you talked about, the sharing of data and so on, but being able to move those deposits across seamlessly and instantaneously. And when you need to go cross-border, then you're going to the blockchain, right? Then you're going to stablecoin and being able to ledger the transactions on the blockchain so that you can move stablecoin cross-border and then convert to the local currency on the other side. I think that there are a lot of folks that are now thinking about this as well, and moving that direction because of the Genius Act has really pushed a lot of tech providers to move in this direction. And I think it's good for the US economy. It's good for economies of scale because now you can really push the borders of being able to move funds quite quickly. And I did a couple of years in blockchain many years ago, and there was always theorized to be able to tie IoT right to the capabilities of blockchain, because now if I can automate the money movement, I can also tie it to other features and functionality. So say, for instance, a truck passes a particular checkpoint, the truck driver immediately gets paid, right? And so those capabilities, as the industry starts moving in this direction, those capabilities and those type of new features and functions will start coming about. New tech providers will be able to integrate into those technologies. But payments is where it starts, right? Payments is where if you can automate payments, whether it's FedNow, RTP, you can do instantaneous payments, and now stablecoin, you'd be able to really take the industry to the next level. And you talked about, scalability earlier. That's what's really going to trigger scale, because now you're talking about any sort of device being able to trigger a payment.
Wow. Sam, do you think banks are ready to do that?
We're in a lot of conversations about getting there, and I think the international case for speed for stablecoins is the one that's talked about the most, and it's interesting. I don't want to take anything away from it. It's a very interesting use case. I think that the Circle Payment Network is probably going to maybe bring us some opportunities for a lot of banks to be able to do that. I know there's some consortiums going on as well. But Aly alluded to, he didn't say the magic word, but he alluded directly to what I think is the much more interesting use case beyond international payments and speed, which is the smart contract aspect of all of this, right? The truly programmable money aspect of this. And I think that's going to come about with or without stablecoin. I think certainly stablecoins and blockchain bring that mechanism. Do we see some fiat analogs that are built on top of all of these other banking as a service APIs that we've been standing up for the last 10 years as well? I'm guessing we probably see some combination of the two. That's going to be really interesting.
Sheetal, there's a question that's in the, if I can hand it to you, that's in the chat. To what extent do non-government fintech companies affect government policy on banking and regulation, or vice versa? And I think this, sorry, go ahead. I'd like to hear your
Quite a
thoughts.
bit. I mean, I think we heard in the last few years, we've heard Mike Sue's former OCC chair talk a lot about kind of this banking perimeter, and like you have, folks sitting within the perimeter and then outside the regulatory perimeter. So I think that this space and like the idea of non-bank companies, whether they're embedded finance companies or tech companies, offering banking products and services in collaboration with the bank has really changed how we view the regulatory landscape. And so I think that a lot of the work that has been done over the last few years is a direct result of the growth of and the kind of the proliferation of the fintech bank partnership and the ecosystem. So I think that it's been quite profound, the impact. And then even on a kind of data sharing and on like the 1033 front, I think a lot of that is driven by non-governmental, fintech tech companies working with banks and offering banking products and services. I think I saw like almost half of Americans are now solely banking through some kind of an app. And so I think that there has been quite a bit of impact. I think that the regs and the legislation has been slow to keep pace with how the ecosystem is moving, but I think there has been kind of an affirmation of how big this is.
Well, and I think the engagement that we're seeing right now between policymakers and in regulators to lean into this is like it's here. It's not going away. It's only going to get more sophisticated. New things are going to continue to come into the market. Like Aly was saying, like it's just going to get more vibrant, and customers are going to want more, right? These to bank, and so. We gotta lean into it and not try to make it go away, right? I think that it's the day of walking into some people still want to walk into a branch and still want to do that. My 17-year-old probably never wants to go into a bank branch ever. He wants to do everything from his phone. So, I think that I'm encouraged by what we're seeing of like, let's lean into it and let's figure out a way to embody innovation and make it still safe, still responsible, but like lean in and give good guidance. Is really encouraging. And so I hope we continue to see that.
I think one point I want to make, I think there's the innovation and then the adoption. And I think stablecoin is a perfect example. I think everyone is talking about stablecoin. I mean, that's all anyone is talking about. But I'm curious to see how many banks actually want to get into the space. And I think that that's where we will see a slight disconnect. And I think that's where the lagging legislation will also be indicative of adoption.
But I think it's all going to come down to some of the core principles in our space, right? That when banks were trying to decide to get into this, right? What's your strategy? What's your risk appetite? And like, how are you gonna manage it, right? And so if you just use good like risk management principles of like thinking about how to do banking, all of those same principles should apply if they want to go into that particular space. And I think there's going to be plenty of banks that probably never want to or should get into that space, just like with embedded finance, because that's not their niche, but there's going to be a lot that should and will. And I think it's going to be really exciting to see that evolution. And I think it's going to be fun to see all three of our products evolve, right? As more of the DeFi comes in and more payments and things start moving faster. We're really excited about it. But I also think there's a lot that still needs to be fixed in the traditional model. There's still a lot of ways we need to improve how small businesses get lending and checking accounts, and there's still plenty to do in the centralized system. But it's going to be really fun to see. It's a fun industry to be in right now, and it's an exciting time to be here. And the three of us probably wouldn't have been saying this a year ago, but it is a fun space to be in.
So here's the big question banks would ask themselves, what is the economic proposition to banks, right? So there's income from interest, right? But then there's also other than scale, what are sort of the business opportunities for banks when they partner with fintechs? Sort of how do they benefit from it? How does it affect their bottom line? If you have any thoughts on that, but I'm sure I did notice that we did have several banks in our respond and join the program. So I wondered if you had some thoughts on that. Like what
I think the answer to that probably varies wildly based upon what the program type is, right? But I mean, there's program types that bring increased deposits and therefore interest, sometimes, low cost or no cost deposits, right? Which is really valuable. But there's also lending, that whole side of it, right? MPL, PNPL, whatever, right? That can bring assets, right? So I think it probably depends, but you kind of have to look at each particular fintech and what they're trying to do to figure out what it's going to bring strategically to the bank. And I think this is one of the things that I don't know if a lot of banks really kind of sit down and look at is what is the strategy for this partnership for me? Is it just going to bring some short-term money? Is this a PPP loan program? You know what I mean? Where I'm just going to make some money real quick and then it's going to go away? Or is this something that I'm going to build on to build a bigger and bigger strategy, right? Does this enable me to build out some payment rails that now enables me to bring even more deposits, and then I get to build this other thing, so on and so forth, right? So,
right. That's a really great perspective. Sort of what product are you talking about? Say you're a business that has a strong sort of merchant network. That's what legacy what you have. Then maybe some of these BNPLs and things like that might be more interesting to you than others. So that's a great perspective on that.
I also think that's probably a question where all banks can't be treated equally, because I think if you're a small, Durbin exempt bank, the way you make money and monetize this is going to be very different than if you're a somewhat larger regional, non-Durbin exempt bank. So I think that the type of bank is really going to inform how you operationalize a space like that, banking is.
Right.
A lot of the banks that we deal with, right, are really taking their core banking capabilities and expanding them out of the region, right? Especially when you're thinking about community banks, and then once you start moving to regional, super regionals, that's when they have more reach. But on the community bank side, it's really about extending your reach, whether that's bringing in more deposits, growing your fee revenue. Fee revenue could be across interchange, it could be across account maintenance fees, ACH transactions, wire transactions, and FedNow transactions. Right? So, like depending on the way your fees are generated, you would basically be able to extend that. So that same revenue opportunity that the banks have, then there's a margin that the fintechs will also take. So a lot of the folks on this call and a lot of banks will do things around interchange revenue as well, right? So being able to share that across the board.
Right.
What the banks are really good, the banks that we're working at that really do well here is if I'm a payments oriented bank, right? When they start implementing infrastructure like us, it's about lowering costs for the payment, right? Because now I'm going to the Fed and I'm not going through my core, right? I'm going through a cloud-based core or a technology provider like us, where we can provide cost savings rather than going through your traditional core. Similarly, on the accounts, right? The bank's getting cost savings on the amount for an account, so they don't have to take a large fintech and put it on a Fiserv or a Finza, sorry, a Fiserv or a FIS or a Jack Henry. Now they're putting them on a cloud core that minimizes the cost for accounts. So there's revenue to be gained by being able to sell this to fintechs, bring in deposits, and get fees. But there's also cost efficiencies to be gained when you're coming to a cloud-based platform.
Sure, that's a very good point, that the importance of the cloud, and that creates additional risk. However, because one thing that you have is you have Fiserv and FIS are known entities, right? And then you have somebody who's sort of going directly to the Fed, and that becomes, that. But if it's part of a strategy, it's just like anything else. You've got to plan on it and execute on it. Then, in addition to sort of I guess the introduction of new customers and potential new revenue streams and that sort of thing. One of the things that I think that is true, and Amanda, I think you touched on this, is that we're not going back, right? Banking services for a whole generation of people, and certainly whole populations of people who were always receiving money on their phones. There are certain parts of the world where people always receive money that way. I think that it's going to be incumbent on the banks to be able to sort of speak to the newer growing population of people who are digital natives all the way down, and who are, first of all, discovering why they can't get the less 25 cents off their Starbucks app. And also discovering that they're willing to live with that. And kind of how they want to go and experience home improvement loans, all that kind of stuff, I think that's just the way of the future. And that's how these banking services are going to be delivered in some form, leveraging technology that puts it right at the point of the customer himself. They're not going to the bank needs to go to them. And right now it's on their digital platforms. So are there any other questions from anybody in the unit gallery see what we have? Well, I think the one example, by the way, of the one question that came in the last few minutes, one example of governments reacting to what the fintechs are doing is the FDIC sort of restatement of what was already policy. Last year, Comptroller Shu talking about the sort of need to expand the perimeter, to understand that the perimeter has been expanded. And then the Genius Act and the Data Portability Act. I think all of those reflect what is happening. It's as a result of digital banking and that's being driven by the non-bank technology providers are pushing that too. So it's here already, I think, is what we're saying.
Yeah.
Well, I think we're close to the end of our time. I want to thank the panelists for participating. This was great. It was a great dialogue. I feel like we could just talk about this for hours and share war stories and stuff like that. But I'm delighted to see such a great, well-rounded group of people, and the sensibility about it from a really a full 360 perspective is just, it's really what's going to make this, make the future really happen well for banks and for fintechs.